Boa tarde a todos. Gostaria de agradecer a
Good
presença de
afternoon,
todos. A gente
everyone.
teve
I'd like to thank
nessa
you
manhã
for your presence, for your
as três
attendance.
sessões
This morning we've
separadas
had three
e
separate
esses
sessions,
três pilares
and
de
the three
regulação, de
pillars
tecnologia e de análise
technology
econômica são
regulation
fundamentais
and
para que a gente
economic
possa
analysis are
construir
really fundamental so
uma
that we
moeda
can
digital
build
sólida para o
a
uso da
solid
população
and
brasileira.
stable digital
E
currency
dos pontos
for the Brazilian
desse
population's
workshop
benefit.
que a
And one
gente
of the points
fez
of this
é
workshop that
justamente
we have
promover
is
a troca de
precisely
ideias entre campos
to
diferentes, né? De
promote
manhã
the
a
exchange
gente
of ideas from
aprofundou,
different
então
realms. So this morning
teve
we
os
have
debates bem
had
profundos
very
em
deep
economia, debates
debates
profundos
on
em
economics,
tecnologia,
on
em
technology,
direito. E
in
agora a
law,
gente vai ter
and
três
now
outros
we'll have
trabalhos
three
também
other
razoavelmente
sessions
profundos,
that are
bem
quite
profundos de fato, eu diria.
profound as well.
E eu peço
We'll go
que
quite deep
todos
into this
ouçam.
topic, and
Eu
I'll
sou
ask you
economista,
to
vou
pay close attention
me
to the
esforçar para
sessions today. I'm
compreender
an
o que
economist. I
o
will
pessoal de
make
direito,
an
o que o
effort to
pessoal de
understand
tecnologia
what people
está
from
falando
law
sobre o
and
tema, porque a
technology
gente
are
precisa
talking about
casar
in
o
this context,
conhecimento
because we
dessas três
need
áreas
to
para que a gente possa
bring together the
chegar
knowledge
num
from
bom
these three
resultado.
areas so that
Então
we
nós
can
vamos
reach
ter três
good results.
papers
So we have three
apresentados,
papers
de direito, de
presented here,
tecnologia e de
one
economia.
dedicated
E
to law,
após a
one
apresentação dos três papers,
technology,
nós
and
vamos
one
abrir para o
economics.
debate
And after the presentation of the three
com
papers,
a
we'll open up the floor
a
for
plateia. As apresentações
questions
vão ser
from the
feitas na
audience.
língua nativa
The
de cada
presentations
dos
will be
apresentadores.
made
Tem
on the
tradução
native
simultânea de
languages
português
of
para inglês
the
e
speakers.
de
We
inglês
have
para
simultaneous
português, caso
translation
algum de vocês não tenha
to and from
o
Portuguese and
equipamento
English.
está
So if
ali
you
na
need
porta.
simultaneous translation,
Então vamos dar
please fetch
início
your
à
radio
nossa sessão
devices at the entrance of this room.
multidisciplinar.
Let's begin
Muito
our
obrigado a todos. Eu
multidisciplinary
chamo
session.
para
Thank you
compor
very
a
much. I'd like
mesa
to call to the stage
Fernando Mirandes Del Nero
Gomes.
Que vai apresentar no campo de
Who
direito.
will be presenting
Também para compor a mesa eu chamo João Paulo Aragão Pereira.
the law part. João Aragão Pereira. João Paulo Aragão Pereira.
Que vai apresentar o
He'll
paper
be
de
presenting
tecnologia.
the technology paper.
E para completar a mesa
And
eu chamo
to
Yu-Min
complete
Liu,
our
do Banco do Canadá.
panel, Yu-Min Liu from the Bank of Canada,
Que vai apresentar um paper
who will
sobre
be talking about
aspectos econômicos do
economic
CBDC.
aspects of a
Então,
CBDC.
sem mais nada para acrescentar,
So,
no
without
momento,
further
eu
ado,
passo a
I'd
palavra
like to give the
para
floor
Fernando
to
Mirandes
Fernando
Del Nero
Mirandes
Gomes. Muito obrigado,
Del Nero
Fernando.
Gomes. Thank you, Fernando. You have the floor.
Obrigado, Fábio. Obrigado, Bruno.
Thank you, Fabio. Thank you, Bruno.
A gente fez uma apresentação em inglês,
I
porque
have
a
my
ideia
slides
original era
in
apresentar
English.
todo mundo em
The
inglês.
original idea was
Dar
for everyone to present in
uma
English,
treinada no inglês para ver se eu não ia fazer
and
feio aqui.
I
Agora,
was looking
poucos
forward
minutos,
to
a gente
train my
recebeu
English.
informação
A few minutes
de que
ago
vai ser em
we got
português,
the
eu
information
consigo reaprender
that it
nossa
will
língua
be
na prática.
actually in Portuguese, so I'll have to relearn my
Acho que vai dar.
mother
Desculpa pro meu amigo
language.
Yuming que eu tava falando ali,
I'll
eu achei que ia
apologize
ser
to my
em
friend
inglês,
Yuming.
então ele que
I
ia
was
ser, então,
talking to him in
uma
English. I
próxima
thought I
outra
was going to
outra
speak in
vai dar.
English, but in the next opportunity maybe.
Primeiro de tudo, o artigo que a gente
But let's go on
preparou,
in
o objeto
Portuguese.
da
First of all, the
apresentação
paper
aqui, primeiro,
we are going to present
agradecer
here.
a presença
Well, first and
dos meus
foremost, I'd like to
coautores,
thank the presence
Marcelo
of my
Benhossi e Rodolfo
co-authors,
Menezes,
Marcelo
trabalham
Benhossi
comigo lá no
and
Pinheiro Neto,
Rodolfo Menezes,
pelo
that work
trabalho
with me in
excepcional de
Piro,
pesquisa
Pinheiro
e
Neto,
ajudamos
Marcelo
na
Benhossi and Rodolfo Menezes.
preparação mesmo do artigo.
So
Tá
they
realmente,
helped
como
me
o
with
Fábio colocou,
preparing
bastante
this
profundo,
paper. It's,
mas vou
as
tentar,
Fabio said,
considerando o
quite
painel
profound
multidisciplinar,
and
ser breve
deep,
e
but
não
considering that
passar
this
por
is a
pontos que já foram
multidisciplinary
aprofundados
panel,
de manhã
I'll be brief
no painel
and I
jurídico.
will
Quem tiver
skip
curiosidade de
over
se
some of the
aprofundar
points
sobre
that
esse
were
tema,
already
os
mentioned this
artigos
morning.
foram ali expostos,
If you're
com apresentações
curious to know
muito
about this
boas sobre
topic,
stablecoin,
there are
sobre
very
a
good
questão da
papers
moeda,
on
digital de varejo.
digital
O professor Salama
currency
tá
for
aqui nos
retail. Professor
prestigiando,
Salama is here
certamente é um artigo que deveria
with
ser
us,
lido
and
por
it's
todos.
his paper
E a
should be
gente vai
read by
focar
all of us,
mais
and
na-
we'll focus today on
no que a gente chama de
what we call
interoperabilidade
the
dos sistemas de CBDC.
interoperability of the CBDC systems.
A interoperabilidade
The
é um conceito
interoperability is a concept that is very dear to a digital economy context. This concept is present in a law which has actually revolutionized the payments system in Brazil, which is 1865, the law that regulated the payment arrangements in Brazil at large. So this piece of legislation brought forth as one of the principles of the regulation of the central bank and CVM regarding the payment actions, the interoperability principle. Because for many years, the different arrangements and operators of payments, like the prepaid, postpaid, and closed arrangements, the cross-border payments, they all ran in different rails. So for this rule to function and for the economy to become digital, the interoperability became an essential element. It's not different when we are talking about the digital real, which is a new frontier in a very digitized economy as well, in terms of having the different types of elements that make an economy digital. The idea here is to go through the concept of a sovereign digital currency, as well as a CBDC, to put it into the context of the different things that we have on this context without a lot of technicity. We'll try to talk about the stable coins, crypto, various concepts, and try to contextualize CBDC and go to what really matters, which is how can this digital currency operate in terms of interoperability, focusing on interoperability among CBDC systems and local and CBDC systems and non-CBDC systems. Okay, so let's address this slide. Here we are addressing the systems. What the paper talks about $10 in Bahamas, Nigeria, and the Chinese experience as well. The idea here is to bring into this debate the interoperability models that have already worked before. So we researched, and maybe the Bahamas model is what is closer to what we are looking forward here. Central Bank can correct me if I'm wrong, but the hybrid system of a CBDC wholesale currency, which will use the participants' systems to distribute the currency. But anyway, what are we talking about here? A currency before the fall of the gold standard is a legal concept. This is why they tolerate lawyers in such events. And this is what a currency is. It has no ballast, and it's based on the trust of the government. So the state issued currency is physically represented by bills and metals. So this is the currency we know today in law and all of the economic repercussions and even technological repercussions. There is a second type of currency which is inherent to financial systems in the world, which is the scriptural currency, which is private currency issued by the banks that are participants of the economy, and that currency has a multiplicative effect, which is in current accounts and deposit accounts, and due to the way the banks are regulated, they multiply when you loan, and this is in the economy. In the state currency, you have a direct claim with the currency based on the central bank. With a private currency issued by a bank, you have a claim against a financial institution, which is the issuer of this scriptural currency. And I don't have to explain the effect that we all know that this is an engine of the economy. And obviously, as it was said in the panel this morning, we have the bank races and the crashing of the financial institutions. That Basileia rules are there because of that, and this is all part of life. And we also have in Brazil third type of currency that came up with the advent of this law on payments, which is the electronic currency. The electronic currency.
Também se tem claim contra privado, contratual.
You also have a private claim. It's a payment institution that issues electronic currency, but it's a non-leveraged currency. It has one-to-one parity. As a rule, it has to be stored with the central bank or in government bonds, so it has a similar economic effect than state currency, fiat currency, the state currency, because it has this guarantee of the state by indirect means because of regulations, because of state regulations. So these are the different types of currencies that we have and that compose the context of the CBDC. CBDC, well, I'll go very briefly through this because the topic has been widely discussed. CBDC is the first type of currency with a different embodiment. It is natively digital, just as a bill or a coin, but it's digital, and it's based on distribution systems, technologies, DLT, blockchains, and João will address this as well. And this is the origin of this currency, and this brings about a number of interesting legal repercussions on how the currency should operate. So as any state currency, it has legal tender, so it's a currency like any other, but it's digitally
E nesse contexto,
o
real digital
já vem sendo and the digital real has been studied for a long time by the central bank. It is a priority agenda, and it has, in our perspective, well, I believe we all share this vision. It's
uma camada adicional de
an additional layer of digitization of the economy. In Brazil, well, I think we can say that this is an example of how digitization of payment methods is a regulatory compass, and it generates countless business opportunities. We have TED, DOC, and recently PIX, different payment methods and transfers, transaction methods, but we'll probably have soon enough the CBDC. So just a small piece of detail on cryptocurrencies in this introduction. We could spend a whole day or a whole week talking about cryptocurrencies, but in terms of conceptualizing what state currency, private currency, or electronic currency, cryptocurrencies are none of them. These are private arrangements, private rules, they have different characteristics. Sometimes they don't even have currency features, but they are there and they exist because the tokenization and digitization are similar technologies as CBDC. Our president should be part of the conversation on interoperability. So this is the context for this discussion on interoperability, and this is our main topic. The first pillar of interoperability, which is what really matters in a CBDC, I mean, it doesn't work or shouldn't work and shouldn't have any use to digitize the issuance of a state currency if that currency is unable to interoperate with the existing systems. So a first angle through which we can look at this is interoperability that we call between CBDC systems. So different CBDC systems. So we are 5 months into an exchange law being enforced, and it changed maybe a century paradigm in terms of regulating exchange in Brazil, and certainly a digital state-issued currency would have the power to change exchange rules, not only in Brazil but anywhere. When you have digital systems for issuing currency, you can talk about interoperability among CBDC systems, so the Brazilian systems, an American system, and a European system, and that really changes the dynamics of settlements and exchanges. So this is just a cross-border operation of the state currencies, just as we have payment flows, electronic payments that can be cross-borders. And in the past, the law imposed some limitations to that. But we have an optimistic vision of how the new exchange legislation contain the principle of forecasting or being prepared to receive the systems in its conception, so that it could maybe already consider these operations among different CBDC systems.
There are some papers that have been written about different models relating to CBDCs, cross borders models that referring to compatibility, places where technology is such that is so standardized that it's compatible between these systems, and it would have minimum levels. It would be like a Basileia rule, but each country would be able to be part of neighboring systems, and this way would be important for exchange to occur. And the system is interlinked. The CBDC systems can talk between themselves. It's not the operator that works in different systems, but the systems talk among themselves, and this maybe would be a model which would be more difficult to be implemented, but of course this would be something, I don't know if the central banks are thinking about this, but this would be something that would be the objective in the mid-term, and would be a single topic, a single coin in the world would be maybe a utopia for the future, and we're not going to talk about that. And something that we have that is extremely interesting would be the interoperability between systems of CBDC systems and non-CBDC systems. Here, if you're not from Brazil, most of you here are Brazilian, of course, but some of you know that PIX was a significant change in terms of payments. PIX, PIX, is only the tip of the iceberg, as many of you here also had the opportunity of studying abroad, and it's been quite a while since I went. I didn't use checks anymore, and in Brazil, when I came back to Brazil, when I actually used checks in the US, because in Brazil, TED was really something that everybody used. So in this context where TED was regulatory, where you can have, you can pay things through TED, this was a proof that the payment was a universal proof that the payment was being made. And this is quite old in Brazil. We have had this for quite some time, and this wasn't the case in many other countries. So the digital operation of the coin, private money in the central bank was occurring for quite some time. With PIX, this became 24 hours, 7 days a week available, and this occurs in rails, in different rails, and the law applies to everywhere in Brazil. And PIX is a network, and it's a payment that you can do that is instituted by the central bank. And in this context, all the different kinds of systems should be interoperable. And how did this occur in the CBDC's case? We defend a vision which was done in Bahamas, which of course they're much smaller, but I was in Consensus in Austin 2 weeks ago, where we talked about this when the Prime Minister of Bahamas, where they said that they were a crypto-friendly country. They were extremely open to cryptocurrencies, and they put the SAN dollar, which have a very similar interoperability system as what we believe to be the same. So to use the CBDC from the country to automatically talk to the existing systems for settlements in the country, for instance, for PIX, etc. So instead of having a claim, instead of running a system that against a specific IP or a specific bank, you have the possibility of doing the coin, the money work digitally inside the existing system, being in this, having a significant protection and being an electronic currency. There is a discussion, and I will refer to the Salama's paper here about the difference between CBDC in different aspects, and CBDC will be a new way of issuance, and it will continue to be a form of being not necessarily direct will have a direct claim against the central bank. So it's not the central bank that will organize this, but and he will not register all the accounts, all the movements, but it will be work the same way how you accept deposits for state money, for private money. So it will be a ledger for the state, and it will continue to be so. And lastly, going to the final part of my presentation, we would just like to highlight a few issues related to how, beginning on this, what would be the challenges for the implementation of this system, what we have to be careful with. We, of course, need to have to be careful with money laundering, because money laundering and the state money is anonymous by definition, so CDBC maybe it won't be. So how do we implement this a standard practice for the whole industry with international observances, and how will these systems be uniformized so that money laundering is not something, so that it can be something connected to the different systems throughout the world. And every time you have a system that, when a system that is CBDC talks to a non-CBDC system, what will happen? So tokenized systems or even cryptocurrencies, one of the advantages in relation to them is that if you do this, if you can talk the fiat group world with the it would be a very important bridge for smart contracts, for all that is talked about, that maybe we had a gap before. Now we still may have this gap, and there's maybe a connection between the real economy and state economy and crypto economy. So we have to create a form of this gap being bridged. It's a scenario that is extremely active. We just launched the inscription for the players for the pilot program. We already have the guidelines established. We have them well determined. Everybody is expecting and waiting for what this new phase of testing will be like and what the participants will do. The technology aspect, the technological aspect is very important. Microsoft is here, and we know that we will learn a lot about what is happening in other countries and other places. But basically, we're getting to the end here, and we're very optimistic about the scenario that is up forth. I'm talking about the interoperability of the CBDC's systems in terms of absolute convergence of systems that are non-CBDCs, that are based on digitalized economy, and systems that are not run by the state. And we believe the CDBC and the model that is being implemented, what worries would be addressed, and this would be a specific layer that would need to be tackled and make it easier for users to, in Brazil, to adopt, and it would be more easier for citizens to have trans-border implications. Thank you very much. I pass the word back to the moderator. Thank you very much for coming to the session. Fernando, thank you very much for your presentation. Very interesting. Just to detail a little bit more what we're going to do now, contrary to what we did in the morning, we're going to ask you, we're going to go to another presentation now, and only in the end will we have the debate for all members so that we can tie in all the different areas that differently from what we did in the morning, okay? So I would ask now, please, Joao to speak, and he will, could we have the clicker, please? There we go. And Joao will continue here with his proposals related to technology. Thank you very much. Joao, you have the word. Good afternoon, everyone. How is everyone? Nice to meet you all. I have come here to talk about a proposal by RLM, Regulated Liability Network Architecture, to talk about settlement of tokenized assets, liabilities, and transactions, including the wholesale CBDC. Real digital. So we are 5 in our team. Me with David Cunha. We're here in Microsoft. We worked focusing on technology. David is talks more about technology. We have different teams. We have FSIs here, and Wesley and Diego here are experts, and they experts in security. And relating to security, basically this will be our strong point of all the presentations. And I will explain a little bit more about Doppler effect and how we apply this in our RLM. It's a very simple agenda here. So first things first. So the state of the art, and how do we can we construct this system? Of course, we have a few concepts around the world that are being put in practice using confidential computing technology, which is the core of this, and it's basically focusing on security. And then in the end, we're going to talk about security and privacy, or PKC, or post-cryptic cryptography that can be applied to CCFs. Okay. Before, I would like to talk about this quote from Mary Curie. She was a scientist. She wrote this quote here, but the central bank is going a little bit trying to break this paradigm in terms of innovation. So progress can be quick. It can be maybe not that easy, but the speed of that the central bank is operating is incredible. I have worked with other central banks in the world, and in Brazil is becoming a reference. It is being an example. Latin America and other parts of the world, it's quite impressive. We're talking about a little about the state of art for our reliability RLN, where we can create a step-by-step architecture, regulated liability network. And every layer, there's a point where security is being implemented. So security is always in the forefront. Confidentiality, which is also another key term that has been talked about in this network. And when I talk about the bank side, when I talk about the communication between bank and central banks, we have to talk about security. So this is more a representation of the famous settlement layer, where we have all the CBDC aspect, and where I will do an analysis with a pilot program that is being done in Brazil. We have some nodes, there are some consortiums that are being made to be part of these nodes, to be part of this famous RLN, and we have architecture, and we work with different banks to create different regulated environments. For instance, we have tokenization of debts and other aspects. So we're creating now a network of communication, one of the most important networks that we have had, and this is where the game actually starts. It's an interoperability layer. And this is where Microsoft technology, and I will explain how this occurs in a little while. And here we are able to have this DDP and BDP and interoperability layer and cross-border payments. And we have a few layers here that are quite interesting. In the central bank layer, for instance, we talk about the VM Ethereum layer, and in the next layer, interoperability layer, we have other quorums, and we have Corda, we could have others here and other protocols that could be used. And then this is quite interesting. Interoperability between platforms, blockchains, DLT, and then I'll start talking about the interoperability between PIX and open bank payments through PIX, and so forth and so on. And we also we talked about this in the morning, don't create overlaps with PayBank and PIX. We want options. We want acts that PIX cannot do today. So for instance, this layer here, 3, related to protocol and asset layer, or the virtual ledger, for instance, we have 2 liquidity pools via APIs and create a balance. For example, using a layer of blockchain, so you keep the confidentiality and so forth. And of course, we have the liquidity pool, which is normal in each bank, where you have this balance. And we heard a lot about the final client, and for they use PIX for this business transactions. It's not important, but this needs to be abstracted in the super app of the bank or of the banking institution. The business layer here, we have interopt. We have the interoperability with PIX again, and so everything related to MEAT and DFT and all the different layers related to DVPs or the payment of DFT inside a smart marketplace. This allows for different possibilities. And also you have the QIC, QIT, what I'll explain very briefly at the end. And this is a message that's quite interesting in this fourth layer. Don't trust in one single score. What QIC is delegated to institutions at the end point, relating to money laundering or terrorism financing. We talk about models and statistical models. I don't trust them. I don't believe in them. So at least you need to have 3-4 scores of the main payloads. So if you analyze one payload, why don't create another score for that? Why don't you do that? And the fifth layer, where you have the end user, where you have to abstract the different balance between the coin that is in the client's hand, be digital, be physical, be it where you have a digital wallet, and where you'll be able to apply different concepts related to security. What are they? Multi-party computation. You have representatives. You can have a cryptographical representation of part of a key that is distributed in different regions of the world. This is a possibility, and I'm talking about the hypotheses, of course. And this architecture, it's easy to be explained, the Doppler effect.
The farther from the regulator, the further it is from a security point, less safe is the environment. So if the digital wallet, which is in the hands of the final users, are not stored in a key vault or a safe environment, that private key that will hold all of that asset, that holds the digital signature of that asset, creates a failure, a point of failure in the whole ecosystem from the central bank. Central bank may have a whole layer of resistance to quantum attacks, like the DVP, the virtual ledger layer, but if you have a single point of failure, you may compromise the whole ecosystem. So the thing is, we can build a completely confidential environment. So this is the next the slide. You see how interesting. I have removed layer 2 and 3 and made a representation of the sum of the balance of the banks. Each bank has the visibility of their own data. Central bank has the sum of all of the balances, but they have no information on the users. This is quite interesting because it fits perfectly into the ecosystem. But how can we do that? How can we maintain confidentiality and privacy of data? This is another representation. You can imagine that I can create layers and I have the whole environment here. If Bank A wants to base their tokenization environment based on Corda, there's no problem. You create an interoperability that communicate with this environment, and you connect it to the RLN of the central bank, and it can be Quorum, Corda, and anyone. And in the consortium, some pilots can be executed as part of this environment with confidential information. This is an interesting point, and I brought here a few examples. Can I run EVM runtime on top of CCF, completely confidential network? Yes, it is possible. These are two examples. I can run an application. I can have EVM runtime on top of the CCF. So again, the lower layer is safe. And there's this word, which is the enclave. It might be new for some people. I'm trusting the hardware to trust the
De novo, é uma nova possibilidade.
transaction. I am removing the layer of the software, so it's a new possibility in terms of interoperability. This morning we presented a triad. I will introduce the CBDC triad, so confidentiality, integrity, and availability. How can we, based on a confidential computation node, create a framework and a network? Interesting concepts. What is common today in encryption? We have data at rest, data in transit. We're talking about DLS 1.3. Some algorithms call them quick. But imagine that I can have that like with open banking and PIX, so any communication with the central bank via RSFM is the mutual channel. But if I can terminate this MTLS channel within an enclave in which I don't have the capacity to look at the information from this plane, I begin to close and the gaps of the whole system. Even the central bank is safe. But this is the work of Microsoft to use the confidential computation intelligence to create an open source framework. I have highlighted a few works here. So Microsoft created this open source, and of course it's creating a proprietary version as well. It is plugged into other blockchain or DLTs, and there is also the managed version. There are some key points here: confidentiality. So it trusts the hardware. So everything that is on the memory on execution is encrypted. Transparency. It's append only, immutable append only. In terms of governance, you have a vote, you have a whole consensus of vote. This represents the central bank very largely. So there are some consortiums and banks and payment institutions that can enter in this vote for changes and everything else. And there's the availability, so crash fault tolerance, the CFT, and disaster recovery. This is part of a consensus algorithm, and we cannot explain the consensus algorithms here, but it's an interesting point. There's also the possibility, and in addition of being compatible with EVM and Solidity, you can also develop it in C++, TypeScript, and JavaScript. So we begin to expand the possibilities in terms of development. So it's developer friendly. This is to explain, I was talking to a few friends here, how can I prove that this environment is really running on a confidential environment? Well, there's a possibility here to make a remote test and prove to an auditor that I'm running on a confidential environment. So before you record it on the ledger, everything that is on the environment will be encrypted. So you can choose what's going to the auditor. I can make a public record and it will be encrypted. This is the famous enclave. So I have a transference here from Maria to João, from Mary to John. So before I record it in the ledger, I have a service key and I have a ledger encryption key. So you see that I have a granularity for Selic, CVM, central bank, the interest rates index for the environment of the bank. So you create groups, and only part of the teams in the bank should have access to, for example, an anti-terrorism or money laundering departments. So you can maintain confidentiality even in the environment of the bank, and only authorized personnel can access that specific piece of information. This is just a comparison very quickly. This is a CCF, or consortium, confidential consortium framework, working here with a 10,000 TPS. A few comparisons here. It's a bit small. I don't know if you can read it, but this is just a comparison. Should I use homomorphic encryption, ZKP, or make a combination, for example, and use hardware encryption? Is my transit on software or in hardware? So these are just some hypotheses we have on the table. We are validating. For example, there's a concept, proof of concept running on a few places, which is, for example, one of them is maintain confidentialities in the securities law. In some countries, this concept is already being implemented. Just very briefly, the consensus protocol, how it trusts the TEE, so it avoids Byzantine faults. So I make the commit after the 2f plus 1. So the transaction is committed when f out of 2f plus 1 acknowledges are received. And this is a famous protocol, high availability. Yesterday I was in the central bank in São Paulo talking about high availability and critical issuance, and there is a message of the central bank saying, well, almost all FBCs in Brazil have to be ready, for example, for a high availability environment. This is good praxis, you know. This is the basic point. If you've worked with big data, if you know, if you have the 3 nodes, one fails, you need to think about disaster recovery. For example, we can use HSM to have an offline security layer. And I have a composed but Lego kits. Uh, Looks like a joke, but it's this is the composition of architectures. It's like playing Lego. This is interesting. If you're bumping into the node, you can use point 0.3 TLS and the whole environment of the token ID, public key, balance, and signature. And then I make the commit to ledger operation. The most important is the global consistency and universal availability. The point here is forensics investigation for the whole environment is provided for. This is just a very quick transaction. This is could be completely offline. It's a wallet connected to any node, and then the transactions are the operations are verified based on the proof of possession, and so on. This is part of the governance. This is just an example in the right part of the slide, some possible members of the distributed governance model. And on the left, you could have a multi-cloud environment with maximum availability with the different clouds, or maybe a hybrid. We have no problem here with any of the models. It could be completely hybrid. Here it's a multiple CBDC or MCBDC, in which I can maintain an atomic currency swaps using the CBDC members, and I have the transaction lock with the CCF and confidentiality patterns. I can have a PVP transaction between Colombia and Brazil. This is the framework we've created to the Lichtenstein project with Anvisa, and point 4 is the most interesting point, which it receives an initial score. It doesn't matter. It enters the payload and create 4 different scores based on graphs, fraud ring, AML, and other technologies. When I place the CBDC architecture, it could be on the central bank side, but also in the retail bank side. So it's a framework that creates this shield of security. Another interesting point is the PQC, post-quantum cryptography. I don't know if it was 1 or 2 years ago, we had an activity with the central bank to make a viability study for the application of a PQC algorithm within PIX, the PIX system. And when we talk about signature and algorithms, the idea was to make it similar work, and I screenshot the list for the different digital signatures that could be implemented here. When I use the algorithm PQC, do I reduce performance? Do I increase the load? Do I create an overload? The viability study can reach this type of answer. And all of the points of the multi-asset LM network could be protected. And this is at the end, a summary of everything I said. But confidentiality, decentralization, availability, performance, we talked about 10,000 TPS, low latency, and then the forensics analysis being possible for the whole environment. I'd like to thank you for the opportunity to have a facet of being an academic as well. So I like to explore applied innovation. Thank you very much for your attention. Thank you, João. Very interesting to explore all of these different possibilities. He's now speaking in English.
Thank you.
Obrigado. That's the only Portuguese I can speak now today. But thank you so much for inviting me. And it's a great opportunity to present an economic paper, and hopefully you will enjoy this paper that I co-authored with my colleagues in the Bank of Canada, Adona Rashidi and Francisco Rivadeneira, and I'm Yuming. I'm the first author. And this paper is actually about CBDC, but it can apply to many other like public platform. I will be more specific about that, and talking about competition between platforms. I think there's no need to explain why we consider CBDC because there's like a lot of discussion talking about the incentives to issue CBDC and aspects of the CBDC, and they're also focus on the store of value function of the CBDC and the interoperability of the CBDC. This paper actually, what we are focused on is think about CBDC as a means of payment, and what you can think is CBDC gives the country that does not have public fast payment system to launch that public payment system. And also, we are particularly interested in what happens if we introduce this public platform, as well as there are some other platforms in the market, private sector, like Visa and MasterCard, what will happen to the competition with them? And we know in Brazil, we have PIX. So I think this paper also relates to the impact of PIX to the payments market. So specifically, we're going to ask the following questions. We're going to ask how different if their market that is a public platform or public player in the market competing with private players. What's the difference between this competition to the competition just within private platforms? And if there is a difference, we are interested to know what's the impact on the competition and also more broad objectives like financial inclusion and overall like how beneficial to the society we call it welfare in economics term. And finally, we want to know as the central bankers, we want to know how should we correctly price the CBDC payment platforms. You can think of it as we set our network fee and all the payment service providers need to pay that network fee, or we can charge consumer directly. But this paper is working on this in a very abstract way. I think there's many room to interpret the result. So just before talking about what we do, I just want to introduce you like what's special about the payment market. It's a market that economics study a lot, and the two features are very important in this market, which first one is two-sided. What do I mean two-sided? Because this is the market always involve two group of people, a payer and payee, or most of the scenarios will be like merchant and consumers. And another feature of this market is it's an oligopolistic market, meaning what? Meaning there's always few players in the market. You can think many markets are dominated by Visa and MasterCard. Some other country may dominate by different players, but not often we see a market has a lot of payment networks in the market. And that can bring many issues. The issue we're going to focus on today is the excessive card fees. And there's a graph I borrowed from BI's report showing you how expensive the credit card and debit card fees in US and also credit card fee in Canada is very expensive. In Brazil, we also see the credit card and the debit card fees are extremely expensive. But also interesting to know that when PIX is introduced, with a very low fee charged on the almost zero fee on the consumers, but very low fee on the merchant side. But we still see the credit card and debit card don't lower their fee. So that's also part of the motivation why we want to study this is can we explain this phenomenon and can we derive more lessons from this? So as our overview, what we do is we construct the economic model to describe this two-sided market. And also we focus on different platforms competing each other. And we also model CBDC as a separate platform and bears two features. One, the CBDC can offer different value to consumers, not necessarily the same value as those private platforms. The story I'm thinking about is CBDC may, at least for current stage, we're thinking about domestic CBDC, then only facilitate payments in the domestic market, but the Visa and the MasterCard can provide users who want to travel abroad. And that can give the users different benefits of using their payment services. And there's a difference in value they're providing to the consumers than what happens if we introduce CBDC as a payment platform to the social welfare, especially under the constraint that the CBDC is also competing with the private platform. It's not going to be single platform in the market can just set one price without considering the competition effect to the private sector. So what are the main results we find? These are hopefully can generate some more policy implications to the policymakers. What we find is that there are some reasons why private platforms can charge high fee because they have market power, and also because there is additional effect in this two-sided market, which is the network effect. I will be more explicitly about that, but the intuition of the network effect is that if you increase one side of users, will give more benefit to the user of the other side. And that can be leveraged by the private sector to increase their prices on the users. And what's the second result we find out is if CBDC introduced that into the market, that can increase the competition. Basically, draw many users from the private platform to use the CBDC. Can improve the social welfare, let everybody get better off, but actually, even in some worst case that CBDC does not provide equally good service quality than the private platform, it can still generate some benefits to the society. So that's something we think is very interesting. Say, comparing to the private sector, maybe the CBDC platform launched by the central bank may not have same technology or user-friendly interface, but we can still doing something good for the society, increase the payment efficiency. And finally, we find out the optimal price charged by the CBDC platform should consider two things. One is, of course, to increase the competition and try to drive down, if possible, drive down the price of the private sector, private platform, but also gain users from the private platform users. But also need to consider what's the network effects of the private platform. We don't want to destroy the private network because there's some value provided over there, and there's some consumer value a lot from the private platform. Again, I use the example about some people may use Visa and MasterCard for traveling purpose, and if we set the CBDC platform price so low and it becomes so attractive, that can totally destroy those private schemes, and then that will bring some adverse effect, like people going to other country cannot use Visa, or people coming to Brazil or other countries cannot use their Visa card to transact because no merchants accept the Visa card. So I'm going to skip the literature review and just talking about what we do. Hopefully later on some mathematical formulas don't scare you. I will try to be focused on the story as much as possible. So what we think about an environment, which is of course simplified from the real world, but it's good for our to get some implication, see what the platforms are going to do. So we think about two platforms in the market. One is the CBDC platform, one is the private platform. And what they're competing on the prices. And the difference is private platform always pursue profit, so we assume they're profit maximizing. And the CBDC platform not just focus on the profit, but focus on the overall social benefits. We call it total welfare. And consumers and merchants are the two sides of the market. And in addition to the price they pay for the platform, what they're going to get is we call it the network benefit. So this benefit is coming from how many users are on the other side. So consumer will benefit a lot if there's many merchants using that platform. So they have more incentive to use one of the platform. And there are also some other benefit they can receive, which is capturing the fact that different platform may produce different value to their users. So this basically re-describe what I'm saying previously, and I know the equations are not in the best form of presenting. But just to emphasize that, why the network effect is very important in our context is because when you use the platform or use the Visa or the Pix, consumers only considers what benefit I can get from the platform. But usually there is a value they ignore as what your benefit can bring to the merchant. And the same story happens to the merchant side. Like neither side can think about the benefit bring to the other side. So in the optimal case, in the ideal or utopia cases, we should charge the price that is giving back the benefit to consumer and the merchant that the benefit they bring to the other side. So that's why we call this socially optimal pricing, which is again not in our perfect display here, so I'm just going to skip. So what happens if there are only two platforms which are private platforms? There's no involvement of CBDC or the public platform. If two private platforms competing each other in this market and they just pursue profits maximization, what happens there is, and we discovered that the price will be distorted from the socially optimal price in two ways. One is from the market power. So they have a market power to users, so they can increase their price by a certain amount, so that users will reduce their usage, or there will be less users, but it's more profitable to them. But there is a unique distortion in this two-sided market we call the scale distortion, which is coming from the network benefit. So the larger the benefit and the more distorted this price will be. But the distortion may not be always like bad for the price. Sometimes can lower the price, but maybe not in a socially optimal way. Maybe sometimes the card company want to incentivize consumer to use more, so they give more rewards. So again, what's the market power is depending on, this is important because later on we're going to talk about market power when we talk about the optimal price of the CBDC platform. But the main message we want to say here is the better the service you provide to your users, the more price you can charge. So if a platform can bring more benefits to their users, then the platform can charge a higher price. And the vice versa, because if your competing platform, if your competitor providing better service, you're going to lower your price more to persuade people to stay. And there are also like the scale distortion can sometimes positive and negative based on different scenarios. So I'm just going to skip here and talk about what happens if we introduce the CBDC platform. How much time I have? Okay, great. So what happens to the CBDC platform? CBDC platform want to set the price, maximize the overall social welfare, like overall value bring to the society. And this include the private platform profit as well. So CBDC is considering the consumer want to bring more benefit to the users, but at the same time, they don't want to destroy the private platform, so they set up in their objective function, in their objective is to like consider both sides and also consider the private platform profit. So then we discover what the optimal price should be, which is not exactly same as the utopia case that like the social planner just introduced to you, but somewhat different. There's a social optimal pricing there. In addition to this, there's a network effect adjustment because consumers are not joining the platform in an optimal way. There's still private platform in the market. There could be they could charge the price still very high, and consumers are going to join the CBDC platform more than the socially optimal case. So there's no way to adjust that, but there's an additional term we can see there is we call the benevolent adjustment. Before I introduce the benevolent adjustment, just mentioned there's no market power charged by the CBDC platform. So we are not like the central bank should not look like a private platform to seek for profit. That's why there's no market power here. So why it matters, the benevolent adjustment matters? It matters because the CBDC price shouldn't destroy the private platform network effect. So the benevolent adjustment depending on the market power of this private platform, and also depending on the, we call it the diversion ratio. I mean, it's an economic terminology measuring how much impact the one product lowering the price can attract users from the other product. So these two things together, meaning we care about, because the market power of the private platform depending on the network effect, and also depending on how good the service they provide to their users. So that means we should consider if our product, if the CBDC platform is providing as good as the private platform. If not, you should increase the price instead of lowering the price to zero or to the marginal cost. So this is basically what I said. If the private platform is better, you should increase the benevolent adjustment. And also we explore many other aspects of introducing the CBDC, including what's the impact of to the competition. We see the private platform will lower the consumer fee, but not necessarily on the merchant fees, which is consistent to the PIX case. We see in the previous graphs that when PIX is introduced, the merchants do suffer a big cost from the Visa and from the credit card and debit card. So, and why is that? Because we think consumers are the one, because in the model we assume consumers are the one to decide which card to use in the transaction, and that gives the consumer some advantage to face lower price if the CBDC is introduced. But another aspect is we find out introducing CBDC will increase the financial inclusion, and that's also the case of the PIX. We see there's a tremendous uptake of the PIX. Many users start to use the PIX, and it's increasing the financial inclusion purpose. Finally, for the social benefits, for the social welfare, we see it can improve even if we offer lower benefits, but still we cannot reach to the utopia like the socially optimal case. Finally, I just conclude what we study is the CBDC as a means of payment, and more specifically, we're thinking about CBDC as a separate payment scheme competing with the private platforms. And the difference is that we're not pursuing the welfare, we're not pursuing the profit, we're pursuing the welfare. And also we considering the competition to the private platform. And what we find is if we make the CBDC objective become benevolent, it can improve the social outcomes, even though we cannot achieve to the socially optimal. Finally, we discovered this trade-off is the optimal price of the CBDC should balance the incentive to increase the competition in the market, but also need to ensure that we do not destroy the network effects of the private platform. And thank you so much. I look forward to your comments.
Thank you to all of the speakers. The papers are quite interesting. I have a few comments before I open the floor for questions. I think that the first paper, Fernando's work, really shows the complexity of the Brazilian payments system, in which we have a diversity of different currencies coexisting in a harmonious manner, and we are trying to introduce even more technology within this complex environment. So when we think about the environment we have today, we can clearly see the effects that were mentioned by Yuming on his paper on retail CBDC, given that, or at least I like to think that PIX with e-money here in Brazil may create a synthetic CBDC. So I believe that this a framework that was developed in Yuming's paper is very good for us to understand the interrelations of e-money within this environment. And about this layer, we have, I mean, over this layer, we have the regulated liability network layer, in which you can use new technologies and take a step further in that direction. So the complexity of our system is clear, and it was made very clear in the broader presentation I made in Fernando's uh, paper and in Fernando's presentation, very precisely described in Yuming's paper and really demonstrated some possibilities in Joao's paper. So I'd like to thank you very much. The three speakers really gave us a very good overview of the topic at hand. So I would like to open the floor for questions from the audience. So, microphone, please. Good afternoon, everyone. Congratulations for your work. These were very educational. The three of them were excellent. My name is Carlos. I'm with the University of São Paulo. And I'd like to ask questions to everyone, but I'll just make a question to João. If the others want to comment, please do so. Interoperability is being accompanied by uh, so interoperability, and the second step would be the interconversion of. So I'd like to know, maybe not in the short term, but in the future, we can have interconvertibility between a tokenized asset or digital real, and another crypto. Can we think about this in the short term? Well, the short answer is yes. It's in the roadmap. The architecture I showed you is the first step only. So there is an interop among different DLTs, but remember layer 5. CCF can reach all the way up to the top, so it can make a connection with that Web3 backend. It is one of the possibilities. We have other partners that work with that. Today, clients are banks. So my clients are banks, and banks can offer this type of circuit. It's a term that was used this morning, LZKP. The circuit can be offered. But when I start to open up to this CF, UNDF world, this point of communication has to go through some security points as well. So yes, we are working on what I showed, the permissioned quorum, ledger, others, but there is a back-end communication work for cryptos. Today, a bank can offer any type of payment, investments in other types of currencies, currencies from abroad, and here using exchange and this communication channel. It's a parallel activity that is being carried out. It's the Web3 backend. So in 2025, maybe this type of offer to the final customer, as myself, I see a lot of advantage, and it increases the NPS of that customer because I have now more options and I'm being offered more products, and I think that the NPS will increase. Well, I'll dare to answer the same question. The same Well, about legislative technique, central bank and legislators. Well, central bank really participated on the most recent legislation drafting, but the way the rules are being drafted, well, the rules for opening up of accounts, 278 is another example of an legislative open architecture with a rule based on principles, so that the regulators can go into details, and so that new technological solutions and innovations can be adapted and framed into what the law allows, and that can be a market development, but in the perspective of João places. So yes, I am with legal in the legal area, but I would also use open architecture for that. I'd like to encourage the ones interested in papers from other areas to move away from your comfort zones and ask questions that, well, you might think, well, I'm not going to ask about that because I don't know much about it. But the idea is really to try to understand and try to understand what other fields are doing, trying to establish connections. So I'd like to just make this provocation here. Do we have any other questions? Yes, here. Good afternoon, Scarpaiva. Congratulations on your presentation, but my question is to João Paulo. Just like to confirm that if I understand your work in Microsoft, if I understand you properly, you have proposed an adaptation of the Raft, which uses confidential computing so that it be resistant to a Byzantine scenario. Is that so? Yes, this is a basic understanding. Obviously, there are many different points of signatures, but the basis is the Raft. Yes. And it's your proposal, or is just an implementation of someone else's proposal? Well, actually, let me give you a timeline of this framework. This was born in Washington. Microsoft has a research center. OpenAI is being invested. The blockchain. So it was born in Washington. We created an open source and we wrote a few papers. It's quite interesting. Well, I participate on both worlds. So I write papers and I also work in the area. So when you move away from the academia and go to the application, well, I'm talking about the quadrant of research. Banks are in an Edison's quadrant, but we need Bohr and Pasteur quadrants. We're working on applicability. Where do we apply? Where do we implement these theories? So can I run this on top of confidential computing? The answer is yes. Let us test it. So this is why the pilot phase will be sensational next year. But you understand it right. I think that yes, it is a possibility. It is open source, and I have talked to friends, and there is also the managed version that can be tested as well. It is open source. You can download it, and some partners present here have have run a few tests. And I really like to test and see. The PQC, I would like to participate if I can analyze and implement this as an environment like this and see, well, this environment is resistant. All the central banks around the world will have a central bank stamp saying, well, I have tested this environment. Is this compatible with more than one security claim technology, or just one manufacturer of the Azure? The Azure manufacturer you're talking about, is it Microsoft? No, it is compatible with MD as well, with AMD. So it can be Intel or AMD, SVS, NVP. Well, let me emphasize Fabio's work. This session is a proof that interoperability is necessary. All the papers here somehow touch upon this topic, and we've tried to uh, cross the themes in the morning and this afternoon and create a common line that can connect all of these independent debates around an agenda which is essentially cross-cutting when we talk about different processes and emerging technologies. For that, we need to bring together experts from different fields of activity. So we see this as in the digital real project in the central bank. It involves different areas in the bank. So when we put together this workshop, we also felt the need to bring into this debate not only technology uh, and innovation. This is all connected to the digital real agenda, but we have a strong interdependence with areas of regulation, law, economy, finance. So we're very happy to have a panel bringing all of these topics together. And I have a comment. First, I'd like to thank Fernando, João, and Yuming Lee for brilliant presentations, and based on the specific theme that Fernando brought on his presentation, I'll try to uh, ask a question to each of the authors here. In Fernando's presentation, he mentioned a classification of the committee of the payments of the BIS for interoperability of CBDCs. So you have maybe more domestic dimensions of interoperability of legacy systems, not just on the central bank with the digital real, DLT, and on-chain, off-chain. Not only that, but also the international dimension, and the classification separates in three models. A compatibility model, which is a model in which you can interoperate in an easier manner if the infrastructure of the systems have a different um, or a similar messaging systems or an interconnection system, and not necessarily the infrastructures communicate. Part of the national payment systems in RG PSs were built in an individual manner, and the interoperability is quite complex. And here we have an opportunity to, up to this point, have several CBDC projects to find common patterns, but or standards. But when it's not possible with the operational manuals and layers, we can create systems and integrate systems that are different. And the third model is the single platform model. Some cases of the BIS Innovation Hub have explored this concept of bringing several digital central banks into a common platform to interoperate. And in terms of compatibility, it's worth doing a proxy for the Digital Real project beyond interoperability, but also considering compatibility of innovation. When the central bank decides to explore in the pilot program a network that is compatible to EVM, we can bring innovations that are already running and are somehow mature in terms of interoperability, and bring forth protocols and market structures and test non-traditional solutions for the financial market and market makers and so on. So we want to explore these new infrastructures, and with the EVM compatibility, we understand that we can bring forth these solutions and format it as we need it for the digital real and for a network, financial network distribution. And also, the dimensions of Fernando's paper really deal with interoperability of non-DLT, off-chain and legacy systems, and cross-border systems interoperability. But it is a subject that was really present in this morning's sessions, and more complex interoperability of permissioned digital network with other public networks and other permissioned networks of DLT. And this is a subject that goes far beyond the technological layer. You have several issues with compatibility of standards and to operate assets and conduct transactions. You should all be in line. They should all be in line. And we see some centralized, non-centralized solutions when we can bring at least one layer of know your client authentication and LLCFT. money laundering and terrorism financing, as we have been talking about, and up to what extent we understand that these regulations of digital real can be exported and made compatible with public networks. This is a comment that if you want to touch upon, Fernando, would be very interesting. And I will also make two other questions. And to João, I'd like to say, well, looking at technology and this part of confidential computing and CCF, so the framework of confidential computing, you propose a consortium, so a new intermediate layer to connect different layers to the infrastructure of the digital real, but you have a common governance system. And I'd like to know to what extent this layer of confidential computing has to be in line with the lower infrastructure of the Real Digital. We have a number of nodes in the pilot that represent institutions that have applied it, and to what extent should that reflect the governance or the participation on the confidential computing layer. And lastly, to you, I'd like to you mean out. Well, we have interoperability, but we have two similar solutions that tackle a similar problem. Sometimes that competition ends up dictating what will be discontinued and what will be used more intensively, or even coexistence of more delayed phasing out. But to what extent, when we talk about digital real, and well, it's on the essence and infrastructure framework that is adequate to incorporate financial assets, so related to the national financial system and securities. And we have decentralized ecosystems, financial ecosystems. A lot has been going on. Considering what we want to do with the digital real, to what extent these classic financial assets will compete or migrate to a permissioned network, or vice versa. Some of the cases that cannot be tackled can coexist in another public infrastructure. So this is just a provocation, just a reflection. I don't know. I know that the scope of the paper doesn't get that far, but I'd like to collect your insights on the subject. My questions were quite broad, but if you need clarifications, I can repeat.
You talked about Bruno, something that I thought was quite sensical and important for this discussion. First of all, before we begin, congratulations to good thing. It was great for your intervention, because you brought many different aspects to this discussion, and these things end up convergence. Convergence is it's in vogue, and I will use this. So in line with this, I will answer the question about talking about convergence and how this convergence can aid dealing with the point that you talked about, of how I am able to bring forth governance of CBDC to markets or to kinds of assets that don't have any regulation today transversally, and how could we bring some regulation to them? So then how could we make them be part of the more a wider system? Today, when we talk about DeFi means that it's not centralized, because it doesn't have an authority or sovereign power that rules it. But on the other hand, you have national rules that prohibit, for instance, financial activities in Brazil, for instance, might be even considered a crime. So when you are able to have a technology with a CBDC governance, and you bring minimum parameters, and it's a little bit of what you talked initially, of what system and what system would be used. An open system based on compatibility would will deal with more hypotheses and more uses. So a system that would be compatible, where you would be able to bring minimum parameters for protecting, again, QIC or LTF or LD or AML, sorry. So by definition are not regulated. You can bring more security to the investing public, and for those that will be part of the system and will prevent it from becoming a pyramid scheme. So the convergence between this open system makes absolute sense in the line that we talked about in the article. So maybe you would like something else or something further than what we wrote in the article, but CBDC, beyond a system of payments that we consider that we have PICs, it follows a line of being a layer that would be validated for assets in general to be used in the economy with their own protocol. I don't know if I am borrowing words that Joao would use, but that's what I see. I see this as being, yes, something that should be used in the Real Digital. Absolutely. I would add this, okay? But thank you for your questions. Yes, I wasn't able to present this, but there was a slide relating to this governance slide relating to how it's inserted in the governance. But the point that you talked about, and I should highlight, is if one of the nodes from the network, it doesn't have confidential protection, is it valid? That's an important question to be made, and ideally, an optimum level would be, imagine the consortium that is being built there. We have some nodes, Bank A, Bank C, Bank B, central bank that does the system of voting, but the nodes. But if you have a node that is not inside of this governance related to confidential computing, where you can't trust the hardware, when you can't trust where where you have a pet based on hardware, I believe that then the network becomes frail or weak. So bring it to another scenario. Maybe we can use a container instead of in this environment, and then we would keep this confidentiality. But we do have a voting system for Bank A, Bank B, Bank C, which could, of course, and the central bank could be the mallet. They could upgrade, they can verify. So there are many nuances in your question. There is a risk of confidentiality, and there are possibilities of upgrade it into the system when using CBDC. Absolutely.
Before I answer your question, I think I want to clarify, maybe I not fully understand from the translator. Is your question like about if we launch this CBDC platform, how likely those conventional financial assets migrate to the CBDC, or the service of those financial institutions use the CBDC to provide their financial service? Yep.
Yeah, actually it was like that, but I was specifically asking if assets that are now are on decentralized finance protocols in open blockchain networks would, for instance, migrate if they through a permissioned network if central banks started their own infrastructure and like a proper infrastructure for tokenize this kind of assets.
Yeah. So again, I'm not expert in that. So maybe my insight is very limited, but based on my understanding, there are many aspects of the CBDC. Store of value means of payment, which is the focus of the paper. But many people think the real use of the CBDC will be in this current decentralized finance industry. Like if you use that in the smart contracts, the CBDC can be asset provide you, could be the token they use in their smart contract. I think it's quite large potential to use to help those crypto assets to use the CBDC. Even for stable coins can use the CBDC as a collateral. So that's my understanding of this market. But I do want to mention something related to my paper. There's a talk about the interoperability. I think it has a significant impact to competition between platforms as well. Think about it, you have PIX already, and what's the purpose of issuing another CBDC platform into the market? Maybe another platform is for other financial services, smart contract, proof of the stake, anything like you can think about used in this DeFi world can use the CBDC platform. But there should be some compatibility between these two platforms. Users of one platform can benefit users of another platform. That can generate different competition impact, I think.
Bem, muito obrigado pela discussão.
Thank you very much for this discussion. We have reached our coffee break. We would invite you all to our coffee break. We'll be back in half an hour for our closing ceremony, where the Otávio Damasio will present and debate and talk to Professor Robert Towson about the innovation and digital economy. Thank you very much. Just to add real quickly, today's presentations will be made available online in a few days in the central bank's website. This will be transmitted inside the event web site. We have articles that were presented here, and they will be made available online for download, and the presentation will be made available online for everyone, for those of you. The coffee break will be here on this side, on the outside area here, on your right, our left. Thank you very much. Bye-bye.
Boa tarde.
Good afternoon. It is a pleasure and an honor to be the presenter in this last panel of the day. We'll have a lecture by Director Otávio Damasio, and then we'll open the floor for questions. And we'll have a round table. I am here with Professor Robert Dowson from the MIT, and we were very fortunate to have the professor following the Live Challenge of the Digital Real, and he was a part of this workshop as well. So without further ado, I would like to give the floor to Otávio. Well, first and foremost, it is my pleasure to be here with this event, with you in this event. We have this major challenge to share this panel with Professor Dowson, and to replace President Roberto, who had an appointment today. He knows very much about the topic and has a very clear perspective of the whole central bank agenda and a very firm outlook towards what's going on in the financial system in Brazil and what will become the financial system in the future. We obviously don't have an answer for that, but we are helping to build this roadmap. The idea here today is to go through the points of the central bank's agenda to address CBDC and the tokenization process. The first point here would be trying to understand what's going on in this digital world. One thing that is very clear is that there is a very intense movement of looking for a digital representation of something that contains value. This is something that we see in every single instance. So we are trying to make this distribution of the assets, looking for methods of doing that. One question is that whether the pathway we're seeing today is going in the direction of a tokenized economy. If the transformation we'll see in the future will be taking place through the tokenization of assets. These assets are already in the financial system, but also other assets, new assets will emerge, and technology will give us the opportunity to make these transactions from and to the financial system, and will become a financial service and a product to society at large. This is taking place in many different fronts, and there is a process of tokenization of all things, and we are seeing a monetization of virtual reality if we consider a possible future. What can happen with the metaverse, for example, is precisely in that direction. We can see the monetization of virtual reality, and we believe that this is just the beginning. Naturally, the pathway to be designed is not so precise yet, but we are trying to build on it so that it becomes a robust and secure pathway, so as to give support to the development of the financial system at large. One thing that the central bank has been addressing for quite some time is the convergence. We can see at the level of the players, which are within and without the regulatory scope. And this convergence goes through an attempt of combining three components: text, that is text messages, payments, and contents. When we put all of that together, and you see the movement of the payment of the financial institutions, but especially the non-regulated institutions like fintechs and so on, you have to consider what's going on with this convergence. With all of the development we've seen in the last months, which became very trendy in the world and hype in Brazil, which is artificial intelligence. So the text now has a very strong relevance because every artificial intelligence is reading a message and capturing relevant information, establishing connections with the transactions that are being made in terms of payments or have the possibility of being made, and also the content that is being transacted. And this brings a great value for those who are commercializing and offering, supplying these services. So we are looking to AI with a lot of attention when we can see the main initiatives that the central bank has taken in the last years. Somehow we try to break away from this attempt to verticalize the processes. So PIX was a very democratic product which we brought into the central bank. So the whole development aims to provide the financial system this possibility in an equal manner. All participants have the same conditions. When we look at open finance, well, the information that was restricted to financial institutions in the past, now that information belongs to the clients, the customers, and they can transact all of that information. Now, not necessarily monetize it, but to own their own information. And CBDC fits in all of that. But going back to PIX and Open Finance, we are trying to move away from the verticalization of a financial institution that dominates the payment methods and instruments. When we look at international experiences, naturally, when we consider PIX, you look at, for example, the Chinese situation, and two entities dominated the instant payments there. There were several benefits, but there were also challenges of having duopoly in the market. And the Swedish market, there were also some bank associations dominating the market of instant payments. So we didn't like that very much. And now here in Brazil, we have PIX with equal treatment to everyone, and open finance is just the same. So we see these trends of verticalization, and we try to avoid them. So going into the technological agenda, more specifically, many people ask, well, is this agenda very focused on technology? Well, it is, because we do believe technology is essential for us to fulfill our main mission in the financial system, which is to make the financial system increasingly efficient and competitive. So we see in technology a driver for us to achieve that. This is why we really invest in a technological agenda for the financial system at large. And naturally, PIX is a successful case for all of the work that was conducted by the central bank team. Many different departments working together, and we can see the success of the PIX project by the speed it grew, and it became popular very, very fast compared to other movements that occurred in the world. The speed of adoption of PIX was quite astonishing, and it really made everything more democratic. The average ticket is decreasing, and it makes viable business models in activities that help in the inclusion process. We have various examples of how PIX changed people's lives and how PIX changed entrepreneurship in Brazil, and this brings us a lot of satisfaction. But we are looking for an increasingly efficient financial system that delivers value to society. Well, one other point that we can highlight here in this process of PICs is the bank bankarization, if you will, process, and there are several academic studies that work within the same lines in VIS. Uh, has studies on that area, and we had a first round. There were a few developments, and we have an evolution line that we can use to identify demands of the financial systems and perfect our solutions and look for opportunities to develop this agenda. So we have PICs for charges, automatic PICs, integration of PICs with open finance, ITP, buy now, pay later, and finally international PICs. With the exchange reform, international PICs is now a reality, and it has been going uh, through the social networks. Examples of Brazilians paying drugstores in Paris using PICs. So this is a combination of several agendas in the central bank, but that means PICs working on different countries. We couldn't imagine that 5, 10 years ago. And combined with PICs, we have open finance, which is a very challenging agenda for the central bank. We have looked at international experience and to try to come up with a very broad and encompassing product, which actually yields value. It's in the process. It's still under development, but it already presents some impressive figures in terms of consent, participants, exchanging of information that are occurring every day. So we have 24 billion API calls or instances. PIX is very consolidated, and Brazilian Open Finance has been gaining a lot of attention in international fora, in international communities, winning a lot of awards for its robustness and for the amount of innovation it brings into the financial system. Here we have some examples of financial institutions that are already operational. First, in terms of information sharing, so the processes flows and you have the opportunity to share information among the different institutions. Quick and fast process. This is in real time, and actually you have the ability of going in that speed. But in trading in 30 seconds, you can share information, and with that you can have access to all of the information and share information between bank A and B. That brings a lot of ease of access. If you have financial institutions, you can just log into an app, and in a single app you can have information of bank A, B, and C, and more than that, you can make transactions. So with the payment and transaction button, you can on the bank A app make a payment using the balance that I have in bank B. This is already possible, it's already occurring, and it brings a lot of benefits to the clients, whether the customers are companies or legal personalities or just individuals trying to make their payments. What we see into the future is the convenience for the customers, and that will increase and improve. So we can imagine that the super apps in which all of your life can be integrated, so financial matters and also things related to your transactions, credit, investments, insurance, everything in the same place. So you have a model of a super app that will gather all of the information, and you can have different combinations to bring recurrent payments, for example, into your bank's smart investments.
You can program and schedule investments in an integrated manner, in an intelligent manner, according to your balance that is in institution A or institution B, and you'll be able to do this kind of transactions, these kinds of transactions. And you'll have a flexible cash management for businesses, and this is also a factor that is quite important. And I think this is the next item here. And like I mentioned before, now you have the possibility of a company having its cash management available in a very easy way, which is not trivial today. And then in the future, you will also be able to have the payment of suppliers abroad be done. Other benefits that are being created is that you'll be able to have portability made much easier between institutions. So we believe in this movement, and we believe that in some apps, and this is already present in some apps, and this has been discussed quite extensively about when we talk about tax rates and interest rates for checks. And this is significant for Brazilians because it's a product that nobody exchanges for. When you have Bank A offers this to Bank B, this doesn't have it. And this is not something that is necessarily competition between banks. And now institutions, when you have open finance instituted, you are able to identify if you go over your budget, if you are in debt, you automatically offer credit to you so that one bank can offer to cover the cost in another bank, a debt in another bank. So this kind of technology where you have open finance, PIGS, and everything that the central bank is doing, you're bringing competition to an area that didn't have it before. And naturally, we have still much to be done. Our financial sector still needs to democratize. But looking a little bit back, if we think 15 years ago, one of the topics that we had in Brazil was related to concentration competition. So every time the central bank director or the president of the central bank went to the Congress and they would question if we had concentration or a lack of competition, a lack of offering of financial services in general, or for some kinds of segments, now we haven't resolved this ultimately, but it's not a topic that is such so relevant because we have a series of benefits that are given to the consumers, and the consumers have the perception that they do have options. They, according to their niche where they work with, or according to the institution that they work with, or a financial agent or a bank, or different aspects related to this. So I would say these are some of the benefits and some of the objectives that we had 15 years ago, and now we've finally seen this in a concrete manner. And at the end of this movement, another topic that we believe in, that we think is going to occur, is the monetization of data, which is connected to open finance, yes, and there are initiatives that are being carried out by companies that try to aggregate all the information this information, try to aggregate all the information. This gives to the user the possibility of negotiating this data that he or she owns with third parties. So this information is part of the institution where you work with, but I believe that this can be expanded as a movement. If this is going to happen or not happen, we don't know, but this is a possibility that we envisage. What is important to highlight is that now there's no questioning about information in the financial transactions belong to the individual. If we go 5-10 years ago, even before the process of data protection law, where this opened the floodgates of this discussion, institutions felt as if they were the owner of the information of the clients, and they would use this for their own interests, for their own objectives. So what we want to do with open finance, and what we believe will occur, is that information will belong to the individuals, to us. How we access, how we will deal with this information, we will decide for ourselves. And this debate, I think, evolved, and I think it's no longer a debate. We have the right to own our own data, and now we have to build an ecosystem which will allow us to use this information in our own benefit. That is what the beauty of what we are trying to do today. So we believe in this line of monetization of data. Before talking about CBDCs, I would like to also highlight and talk a little bit about our experience, not only in relation to open finance, also with PIX and other initiatives that we have had related to other issues related to the central bank. When the central bank thinks about creating a base, of developing a product that many times it's basic, what has surprised us in the central bank is that when we do this, the market innovates significantly on what the central bank was provided to the ecosystem. This happened in PIX. We saw many different solutions that the financial institutions thought of and developed, and some of them they brought to the central bank so that we could adequate the regulations for them. And this has been occurring with the open finance. This occurred with the regulations that we did back in Decret, and we thought that the cluster of innovation companies would be to a specific segment that would have a specific characteristic, and now we see that we have over 100 regulated institutions that carry out different businesses which weren't originally thought of when we began. But whenever we think of creating an open database, a regulation that is open. This is quite interesting to see, and quite interesting to see the innovation that the private sector carries out. And this is what the central bank has been doing, has been working on. We're trying to create a base which will give competition, will give incentives for innovation. This has not been different in CBDCs. CBDCs, of course, this is a discussion where we look at everything that is occurring throughout the world. Some changes are some focus on wholesale, on retail, some focus on instantaneous payments, it depends on the state of development of each business, and some try to foment new business models like Brazil is invested in. We we try to identify many different DeFi markets. We try to look for opportunities, challenges. We try to fix some frictions that might occur. We try to bring more active assets. We try to bring more people to the table to participate in the system. Of course, we have challenges in terms of scalability, in terms of settlement rates, but in a personal level, interoperability, when two sides want, things move very quickly. But when both parties don't want, it's quite difficult for it to happen. Of course, there's a lot of discussion in terms of the lack of maturity of DeFi, and we are keeping up with this. It is important for us to kind of understand this and follow this very closely. Here is the architecture of DeFi in its different layers. We talked about aggregate layer, application layer, protocol layer, asset layer. I think we already discussed this. And then we can take a look at the CBDC for Brazil, Real Digital. And what we want here is the following, but the main objective would be the innovation and competition in a digital economy. So we're creating this platform and we want to be surprised by the market. This has happened when we work with the Lyft, for instance, in the sandbox environment. What happens is that we receive a series of projects with series of ideas that we didn't even envisage, and it being built in such a short period of time. So it was quite impressive. It brings us lots of happiness and lots of joy to the central bank, and then we want to foment this more and more. So we do have some directives, and I think the main one would be to give support to business models that are innovatives. Of course, this would be an extension of our sovereign currency, and of course these are some objectives. And of course there's the aspect of security, be legal security, be the information security, data security, be it technological security, which are elements that are unnegotiable. And the model that we've been working with, of course, is the tokenized deposits, that in a sense it's going differently from what is happening in CBDCs in other countries. When we have tokenized deposits, you have the financial industry, basically the banks, that are very interested in creating this product. Here we can show you a project that we have, the private-public partnership. We have entities that work with retail, entities that work with different aspects, and everyone is working together with everything that we've discussed in NEET-5. The project of Real Digital has a few phases. We've been debating it for quite some time, internationally also. We have other phases, and we believe that these phases are well defined and well distributed throughout among the participants that have been participating, and we have phases until 2023-24 for their implementation. This workshop here is a kind of a stage of this process where we get in touch with all the different players, all the interested parties, stakeholders, and to see what they have to say. And now to conclude, the world that we envisage, we believe that everything will be digitalized. We will have financial intermediation. We will have a world in the future where the financial market will be inclusive. We will have a low cost of implementation. We will have more competition. We will have the reduction of barriers to entrance. This is one of the objectives we have, and this is something we've been hounding. We have been trying to increase efficiency in the control of risks, and some things are coming to the central bank so that we can monitor this in real time, so we could identify potential risks in real time immediately. We also have the monetization of data that will probably occur, and in the future we would intend to have a tokenization, a complete tokenization of financial assets and contracts. And to conclude, I would have to analyze the agenda of the central bank, of how it integrates. We have open finance in terms of we have PIX, we have Real Digital, which is CBDC, which is adding to this in retail, but also beginning in this new front of Web5 and everything we've been seeing, and the possibility of having a process of internationalization of our currency. The project of exchange rate reform, we eliminated all legal restrictions for the real so that we can internationalize our currency.
We have other factors that are not related to legislation or regulation, and these are underway, but we are step by step developing all of that, especially with the bordering countries, with our neighboring countries. There are great chances that we advance into that shortly. We are seeing that happening with our partners in the Southern Cone. So this is the movement we are seeing thus far, and all of this process was thought of initially, but it ended up being adapted in the middle of the way. And ultimately, what we're looking for is a more efficient financial system that is able to bring concrete results to the Brazilian society in all of its dimensions. So thank you very much for your attention and for this opportunity of being here in this event. Thank you, Otávio. I already have a question to Professor Downson. I don't even know if this question is fair, Professor, for the time we have to comment so many aspects that were debated in this event today. But based on this presentation given by Director Otávio, we can identify some characteristics that really differentiate and distinguish Brazil in this digital transformation and the tokenization. Can you help us with your international perspective to bring elements of what distinguishes the Brazilian initiative from the Brazilian Central Bank? What makes it so different from other initiatives? What should we be proud of? What should we pay attention to? What should we be careful with?
Thank you so much. I'll speak in my native tongue. It was a wonderful presentation. I learned several new things, and the vision is astounding and breathtaking. And so from the international perspective, the success of PIX has attracted a lot of attention. And you can see in that chart the very, very rapid expansion, reaching many, many people over a very, limited amount of time. It's quite remarkable. There are a few things internationally that are somewhat like that, but I think that coupled with the open banking is really making it unique. There are countries that have developed fast payment systems, but they don't have data sharing capabilities or have even limited the amount of data that can be used by the companies themselves rather than data which can be shared with permission. And looking at those interactive slides with the phone app, I could see even more possibilities that can be done with the PIX and open banking technology. So let me comment a little bit on the LIFT challenge. I'm blessed to have had the opportunity to try to help and work with the central bank. And what I think is rather unique about what's happening in Brazil is taking the tools of DeFi, but applying them to democratize finance. So I want to draw a sharp distinction between the tools of DeFi, which are very powerful, that involve ledgers and digital payments and encryption and smart contracts. But the way that the DeFi has evolved, I mean, is good in the sense that it has encouraged innovation, but it is a bit like the Wild West. And by its nature, it was not thought of in advance in terms of optimized financial design. So what my view of the LIFT challenge is that it's using the tools of DeFi to actually reach people on the ground. So it increasing financial access, and you can see those tools at use in the publication that the central bank just issued. Applications of Visa and Vert and Santander and others. There are many, and they all deserve attention. And also, you can see in that document the openness of the central bank in terms of its mission, which was to learn by doing, essentially, by soliciting, interacting, and doing. And the candor is outstanding. So back to the international scene, yes, it's attracting a lot of attention. I think Brazil is, without any doubt, leading all countries in the world in terms of the programmability. It's using the tools, as I said, of DeFi with the idea of accomplishing more than what PIX can do, because there's full programmable capabilities being envisioned on the LIFT, the digital real platform. And I can come back to that a little bit later. So yes, it's not just people have attracted, that the digital real plans have attracted attention. There are countries involved. I can speak to this through, if I may, the lens of the IMF and certainly also the BIS, which is to learn from Brazil, pay very close attention. Yes, probably adapt these things to the specific country circumstances, but Brazil is the key international player in programmable version of CBDC. So those are my comments on the presentation.
Muito obrigado. Antes de fazer uma...
Thank you. Before I ask a follow-up question, I'd like to share with all of you watching us and let you know, if you want to send us questions, you can use the Slido platform, slide.io, and we have a number for that. We might have time to answer 2 or 3 questions through Slido. Otávio, Professor Robert Downson highlighted this perspective of DeFi for democratization efforts from the beginning of the LIFT challenge design. I'd like to ask you about this broader view or vision. Brazil is one of these special countries that look at the future with this integrated convergence vision. Central bank has been signaling that PIX, open finance, and the digital real have compose a single strategy for the future. What is that strategy? What's that vision, and how are we converging, or what are we converging to in the central bank? And what is the role of an innovative regulator? This is a term that has been used a lot in an innovative regulator. So the central bank has been playing this role of being an innovative regulator. Well, I'll borrow a word from Professor Dowson and try to blow it out, which is openness, and to develop it. So openness. The change, one change we've had in the central bank some years back was to open up to talk to all of the participants, not only the regulated sector, but those who wanted to enter the system, those who didn't want to enter but we were in the sector using financial products and services, so consumers, with the approximation with the real side of the economy, so industry, commerce, services, families, consumers. So we really opened up deliberately to understand all different parts of the financial systems. If we go back even further, central bank had a strong interaction with the banks. Not so much with the financial systems, but with the banks only. And then it opened up and strengthened other segments such as credit cooperatives, created new niches such as fintechs, credit fintechs, and at the same time it began to communicate more and more with other stakeholders that were not part of the financial system initially. So this opening up process was very important for the transition we've seen in the last years of looking for an efficient financial system. Our main mission is to guarantee the financial stability of the country, and this is quite clear. But we are also trying to make it efficient. So this openness has been very important to us, and I think that the Brazilian society recognizes that today. And this openness also made it possible for us to understand what technology is developing into. In the technology agenda, a good part of the work is talking to technology companies that will not be regulated by us in the future. But we're still talking to them because we want to understand what's going on, what they're doing. So we have opened up for the innovation side as well. So the lift challenge came from the lift at large, but the lift challenge came to crown this process, came to really represent all of this development, because it provides support to ideas and initiatives that are in line with the larger perspective, with the broader perspective that we have in the central bank. So each and every one of these projects, even though they're not successful in the future, they bring lessons to the central bank, and they will become part of this process, as a continuous process of opening up. What will be DeFi in the future? How will it contribute? Well, I'm still not very clear about that. I particularly don't know. Maybe some people have their own opinions here, but for me it's not quite clear yet. But the opening up of conversations, opening up to get to know all of the facets and nuances of this universe. So we are talking to technology people, with financial institutions, fintechs, with hackers, to understand what are the technological challenges of security. So this is why we talk to hackers as well. So all of that makes us build. These are all building blocks of the situation, and so openness is what we have as the main change the central bank has endeavored in the last years. 20 years ago, the central bank was known as a black box. And today, not only in terms of publicity, information, and transparency, We are recognized, but we opened up the votes of the board, communicating the monetary policy, and this openness is not a formal openness, but it's a form of opening up to calling, in terms of calling people to talk. Let me tell you a story that I have told in public a few times. It's just quite interesting, and it's just an anecdote, but it's a real situation. I heard about this in an event that I participated with one person, which is the CEO of Creditas. When these credit fintechs started to develop, they had a model connected to banking correspondence, and we didn't quite understand why they were in this model of bank correspondent. Uh, and the first time we heard about it, we called them to talk, some fintechs, maybe in 2015, 2016. And then we've met a group of 4 people representing 4 fintechs. And there was a lawyer uh, and their firms actually represented here. So we asked the questions, and the lawyer was the one responding. So they were complying with rule such and such and such. So after this first meeting, we've had a second meeting a month later, and with the 4 again, and the same lawyer. Well, the lawyer is not here, but he knows about that story. And once again, we asked a question, and the lawyer responded, well, we are complying with regulation such and such and such. And at the end of the meeting, I said, well, let me explain something. We're trying to help, actually. We are seeing that you have a lot of innovation. You're bringing life to business. You want to shake up the financial systems, and we want to come up with a rule, with a regulation that can actually embrace you in a safe manner, that can encompass your work so that you can be covered. This is when we had the rules of the fintechs.
And I told this version of this talk in a panel I participated in with a man from Creditas. He laughed and he said, "Look, now let me tell you my version. When I was at the office, the law office, a man from the call centers told me, I forgot his name, the person from Creditas. He said, Doctor, lawyer, the central bank wants for you to be there for a meeting." He's like, "Oh my God, that's horrible. They're gonna punish us. They're gonna say that we're non-compliant. Oh my God." And that's the vision that they have for the central bank. It's not that we don't have the role of being a supervisor, but we were courageous in the way we adopted. So we do call entities, we call the actors that are on the margin of the law to talk with. Sometimes we will have to be more aggressive, we have to supervise a little bit stronger, but they did understand, and we tried to explain to them so that we could incorporate that, we could change the rules to help them. This is the changes that we've been carrying out in the central bank. It wasn't just related to regulations, it was relating to all areas of where the central bank is acting, technology, openness, in general. So the central bank as a whole. I will talk about two phrases that I heard of Outlab, GLab. André Siqueira says that it's incredible that when we removed the red carpet from the central bank, people actually walked in. So it's a matter of openness, and this was extremely important and valuable. Fábio Araújo has also talked about how the role of the regulator is not to be creative, but maybe is for them to create a space for creativity. And I believe that a workshop like this is, and this kind of event or or lift challenges and other events, we've been creating this space for innovation. Ricardo, you talked about a few important things about the openness of the central bank and the change in perspective and actions of the central bank, including economy as a whole and finance as a whole, and including technological aspects, including the regulation and the laws. And we, Professor Towson, we had a panel before this one where we had a multidisciplinary panel where we had the idea of transversability of the creation, not only of a digital currency, but also a digital economy. I know that you were very interested in the panel and we were talking about this previously. Some highlights that would be interesting for you to share? If could you share them here again so that we can learn from your knowledge, so that we can, so that you could maybe you can compare and contrast what we discussed. Would that be possible?
Thank you. So I was a big fan of the whole conference because it has the key, several of the key groups, economics, technology, and the law. And as you all know, we all met sort of separately in the morning, but in the afternoon it was a joint session. And I guess the one point I want to make is it's really a critical effort that is needed for each of the disciplines to be better understanding of the others so that conversations can take place. And that is not easy. You know, for example, for me, I'm not trained in computer science. Fortunately, I've managed to find some really crucial collaborators who are, and we think about things jointly back and forth. And I'm very happy that that has been possible for me, but it is not easy, and it's always a risk that the technology guys are going to go one way and the economists are going to go the other. And given that we're talking about new technologies, there's always a risk that like you have to walk through the technology room to get to the econ room. But they need to be on an equal footing. So the panel was very interesting to me at the end, right before this one. And what I want to say is, from the perspective of economics, but joining it with technology, on the one hand, we're sort of envisioning this brave new world of a digital economy. But it's not as if we're jumping off a cliff. In fact, far from it. We know quite a bit about how financial systems can work, and there's existing literature. But again, these buzzwords and jargon are like a deterrent to entry for others. But let me just say, and I'm happy to translate more in different settings, contract theory, mechanism design, monetary theory, industrial organization, finance, and macro. There are key contributions in various of these fields that are highly relevant to thinking about where we're going moving forward. So market design, we know there are lessons about what not to do, and on the other hand, designs that have very, very good operating characteristics, including designs that allow competition for contracts. But mechanism design also teaches us some lessons that it takes a little more work with contracts because there can be conflicts of interest. There's something called the multiple principal agent problem, which is a version of the moral hazard problem, but that argues that innovations have to be considered jointly because there's sort of an externality or spillover that can happen when there's a common agency problem. Again, surprising also is when you have incentives under contracts, some kinds of designs that encourage ex-ante competition are very beneficial, but likewise designs that are too liberal in terms of trade can actually be damaging. Now that's very counterintuitive because it sounds like I'm against markets. I'm not. I'm all for markets. I spent a lot of time at the University of Chicago, and but the point is, markets, it's not anything goes. You need a regulatory framework to encourage the right kind of competition. And we know, my point is only that we already know a lot about that. And that should be brought into the conversation. And innovation per se can run into snags. Again, we know lessons from theory, Pessendorfer and Mikowski, that certain coordination problems can actually act as barriers. And in those cases, we need the public sector to take a more proactive, in addition to having created the public infrastructure. And I could go on, but anyway, I hope that helps. Thank you.
Muito obrigado.
Thank you very much for your participation. So maybe we have 2 or 3 minutes to kind of wrap this up. Could we, based on the last few words from Professor Townsend, could the coordination process, how could the central bank put itself to combine regulation, technological innovation, and present this in a way in which would work? Maybe another way of asking is, what is the role of regulation in financial innovation? And with that, why is it important for us to have a central figure of the central bank to help direct this moment of innovation for this digital realm, this digital innovation? There are many different vertices to analyze these interactions, but of course, undoubtedly, the main point was competition. We believe, and we have always looked towards innovation, focusing on allowing more competition. I always say that we have the objective of making the financial system become more efficient. This in many dimensions. One of them is to make it more competitive. We always looked at innovation as being an instrument to allow for more innovation and more competition in the financial system, of course, giving more value to society. So the role of inclusion is important, but innovation will also cause other good factors. So we always focus on innovation. How can we foment innovation to make the system more competitive? That is our main goal. So that's how I would wrap up this idea, competition. Thank you. Thank you. We would have liked to have more time. Unfortunately, maybe we do have a few more minutes, but I would just like to thank everyone here, all the participants that came to Brasilia to talk to us, to enrich this debate, to the authors that were able to participate and share their knowledge and translate a little bit more of the articles that were presented. We would like to thank Fenasbaki and the organization of the Central Bank. Most of the team is here today. Thank you very much. And we would also like to thank aside from our final lecturers and Damasio and Professor Townsend, this event had the support not only of the Federation, but also of FITEX, of Crypto, and GL Lawyers Associates. We have tried to bring more people to help add to the panels. We have a special thanks for them. We have to mention a specific person from Fenasbaki, Larissa Fonseca. a 24-year-old. She is helping us immensely. She is creating events that are significant. Larissa is at home right now because she has had a throat problem. But Larissa, thank you very much for that. Thank you, everyone.